Welcome to Revenue Search, everyone.
And then, of course, there's a show called Revenue Search by DSV.
I am such an avid viewer of your podcast.
One of the resources I highly recommend is the Revenue Research Podcast, hosted by DSV.
Hosted by DSV Funds co-founder and CIO Siam and CEO Mark Creaser.
D'ailleurs, ces podcasts sont animés par DSV, donc on le verra plus tard.
One standout resource highly recommended is the Revenue Search Podcast.
One great role in the ecosystem you guys do, plus you're in there investing. Like, it's just amazing. I love what you guys do.
And their show digs into real numbers, real subnet strategies, and where institutional money is flowing.
Back again for the second time. We need to stop meeting like this, Mark. I can make this revenue stream way better. Hold on. There we go.
Pay attention to what these guys are doing. They also provide a lot of, like you said, really high quality information.
Revenue Search is all about, I want to know, if I put $1 in on this end of the box, how soon does $10 come out that end?
Hier auch einen Podcast zu diesem DSV-Fund. Dieser nennt sich Revenue Search.
And I can confidently say he is one of the brightest minds when it comes to thinking about investments.
They also did a pod with Bitcast.
Hello, welcome to Revenue Search.
I mean, what else is there left to say? It was perfect.
But as you know, I have zero life. I just sit in this chair all day, just looking at Subnet. Guess what?
What? Oh.
Time's up.
I was going to say, at least you haven't got to spend time watering that tree. What's that all about?
I'm in an Airbnb at the moment, and it's fake.
No.
Welcome back for our second, if you're watching along live, a second Revenue Search of the day. I'm Mark Creaser, my co-host, as always, Mark Creaser. Really puts me off watching us on the preview to doing the thing. I think I'm watching the thing. Siam, who have we got this time around?
It always makes me giggle. The tree bit.
I know, and it's not the right mindset to come into this with. We should be coming into this serious. We're investigative. We're just laughing at ourselves.
I know.
Disaster.
Do you know what is serious?
Your ironing situation.
yeah. Well, it's funny you say that. We had Mog this morning on Revenue Search, and then you've gone and done a dress change. What are you, Madonna?
Sun came out here. Suddenly got too hot. I was wearing a jumper earlier.
Sure. Anyway. Let's talk about Seby. So here we have Seby Rubino. He is the new owner of Subnet 44 and hopefully going to change the curse of Subnet 46. Sorry, got to get that right. So Seby, who are you? What do you do? Educate us.
Thank you for having me, gentlemen. It's great to be here. One of my favorite shows. And quick introduction on myself. I have a background in real estate. For my 18th birthday, I got a real estate course from my parents to go become a realtor. So my whole family's in real estate. And that has been like my passion since I was like 8 years old. It's just real estate. How do we provide shelter to people, but also improve our lives? So I've seen that through my family. And that's what got me into the space at large. When I was roughly 20 to 22, I ran a proptech company. And after exiting that, I got into crypto. The whole time I was doing that, I was investing into crypto. So being able to exit and start building in crypto was like a new dream of mine. It's almost like real estate was my first love, crypto was my second, but they follow a lot of the same type of principles. And since then, I've worked at Compound Finance, I've worked at Maple Finance, and I've really gotten a taste of not only DeFi, but also the RWA side of DeFi. And I'm extremely excited for what's to come and think that real estate on-chain is imminent, but there's no piping, right? There's no rails to this industry. So that's a bit about me and, how the heck I got here.
Okay, well, let's work out where we are. So you're a real estate guy and we're in Bittensor. How are you linking those two things together? What does this subnet do?
Yeah, so the subnet does two things in the end, but right now we're focused on data. So the first element of our subnet is data. The second will be building agents competitively on top of this data. But you can think of Resi as essentially the real estate oracle, right? I keep writing on Twitter, Resi is to real estate what Chainlink is to digital assets. You can't have Aave, you can't have Compound without a price feed on those assets to enable decentralized finance. Right? I can't lend against something I don't know how to price, nor can anybody, right? You're just, in the wind. But if real estate is going to come on chain and it is imminent, what is essential to that equation is price feeds. So our first product is a nationwide property database to understand property values. And that's where we're starting. But as we develop, as we progress, we're going to be building an AI appraiser so we can start underwriting loans and build other protocol possibilities on top of Bittensor.
Okay. So the first thing then is data. This nationwide property database. This is the foundation for everything that you're doing. It doesn't exist at the moment. You're building it.
So quick, not a correction, but a distinction here is that it does exist. The problem in its current form is that it's owned by these extremely limiting centralized organizations. And as someone who was buying data from them in the early 2020s, I used to use service providers that have now been purchased by them, by the biggest player. This big players, their name is Atom Data. Atom Data just keeps acquiring any company that gets close to the nationwide property database status, and then they double their prices. So they've done this a couple times, and obviously great for them, but horrible for any sort of innovation. They also stifle any sort of model training. So if I want to train a real estate model and have narrow intelligence on the industry, which is really what you need to be effective, right? You're dealing with people's biggest investments. And just like people didn't want to deal with me when I was young regarding their biggest investments, that was a big challenge of mine. People don't want to deal with a stupid AI, right? They want something that's extremely intelligent, extremely narrow on the subject, and has a vast array of data to pull from or be fine-tuned or pre-trained on. So yeah, it's centralized. It doesn't allow for model training. And in the case you get your hands on it, it's extremely expensive, right? So our goal is to solve across all three of those things through Bittensor.
So how are you building that database then? What are the steps involved?
Yeah, so I can go into a bit of the minor validator mechanics a bit. Right now we're making a bunch of tweaks because we previously were charging the validator, making the validator spend too much money on API keys. So now we're doing a mix. We are giving miners essentially the criteria that validators are using, and that criteria is they're going to be scraping, the validators are, and we give the miners the option. We say, hey, you can either scrape, you can use APIs. We don't care which API you use, but as long as you submit property data on a per zip code basis, validators will check it. If it's correct and it's fast, we will be able to reward you. And that is one element. There are also other elements like users of our products will be essentially miners. They'll be submitting data to the network, so they will be rewarded in their own right. But for the most part, in this initial stage of development, we are extremely laser focused on having miners scrape or use APIs, and then validators essentially check the validity of that data before we put it into our database.
Okay, so you're going to end up with a nationwide property database that it's only really got one competitor nationwide, which is this Atom Data. They're going to be centralized. You're going to be decentralized. They're super expensive. That's where there's going to be some value creation for you. How long is it going to take to build this database?
Before the end of the year. That's a long case, right? The short case is the next 30 to 45 days. Miners are extremely efficient. That's also part of the why Bittensor question, is that you have basically 240 or so AI engineers on your payroll, and you're able to tell them. This is why we want to give them options. We're not going to tell you what to do. We'd limit you, right? We want to open up the possibilities and just tell you how you're going to get checked, right, by these validators. So yeah, ideally before the end of the year, or before the end of November, let's say, but definitely before the end of the year.
Okay, so you're going to have this nationwide property database, and you can have agents that build on top of that data.
Yeah, so agents as in AI agents or real estate agents?
You tell me. What?
Okay.
What are you going to plug in? So you're going to have this. You're going to have this really rich database that nobody else has really got. Certainly not decentralized. It's going to be as accurate, if not more accurate, than anything that's out there. It's going to be cheaper to access. What are you going to do with it?
Yeah. So I'll take a step back so we can go like 5 steps forward on this one. Basically, Resi is like this infrastructure layer where data plays a central part of building this infrastructure. But then we're, as Resi Labs, right, the holding company behind Resi, is building a constellation of applications. So one of those applications is for real estate agent, real estate investor, real estate lender, marketing, right? And this is a predictive engine of who's going to sell their house next. So by having this nationwide property database, we will be building products as the company. We'll also be providing an API. So anybody who's training a model, anybody who's doing tokenized real estate, and they need a price feed on a macro level, they can use this. Our favorite right now, and basically our favorite and most exciting product that we have coming out before the end of the year, is enabling real estate prediction markets. If you go to Polymarket right now, you see weather markets, you see economic markets, you see political markets, and these are all essentially proxies to the economy. And specifically weather, this is probably our closest, I guess, say cousin, where retailers and developers are using weather markets to fix their profits. We would be doing the same for real estate, which is currently not a category on Polymarket or Kalshi. We've had conversations with some of the biggest prediction market companies, and I don't want to name names yet, but it is exciting to know that, okay, there is interest, there is going to be liquidity, and yeah.
There's only like 2, really.
Yeah.
There's a lot.
There's Kalshi or Polymarket.
Yeah, I don't want to blow up the spot, but yeah, it's been really exciting to know that there's interest in what we're building here from the prediction market side of things. But yeah, that's basically brings us to the end of the year and what the data is going to do.
Yeah. How is anybody else in this space? Then you're building this national property database. Atom's got a national property database. How much of their market can you just steal without really doing anything else?
Well, the most limiting factor will be long sales cycles and 2 to 5 year contracts that all of these companies are in. So that'll probably be a journey up until 2030, where we could take most of their market share. In the next 2 years, we could take a lot of their market share. And that's because for the most part, they're signing 2-year agreements, and some of them are bound to be, right, this isn't public data. They're not a public company. But yeah, the goal is to take a lot of their market share. And also that's great, right? That's really cool. The best part is expanding new possibilities, right? If we just continue down the same path of, real estate is a game of let's get this data from people, let's package it up, let's make another Zillow, we're not going anywhere. Zillow's great, right? There are a lot of real estate companies that package data for investors and realtors. They're great. But our goal is to really just open the ability for the industry to be flipped, right? How do we allow people to fund loans? How do we allow investors to go on chain and access new financial vehicles? And none of these players are doing that, right? It's a blue ocean where their game is quite limited in what you can do.
Which one of those things is going to generate the most revenue for you?
Right. I don't want go too far into the future. But we are designing right now a stablecoin project. It's a stablecoin protocol. It'll be called Resi Finance, and it'll be backed by our subnet. Once we build this database, the next subnet, as that's a thing that we've been talking about in the community, is an AI appraiser. If you can do AI appraisals of property, like what the house that I'm in right now, how much is it worth today in its current condition, then I can offer home loans. At a mortgage level, I can offer home equity loans. And my favorite are home equity agreements, where I take in capital and I don't have to pay it back until I sell the home. So in effect, this protocol will function where users deposit USDC and USDT. They get Resi USD, and they can delegate that to any sort of loan function we have, those 3 types of loans. From there, we'll be able to offer financing to homeowners. So we can then package up those mortgages, sell them off, and then originate loans and continue to do that and return a yield. And the numbers are quite crazy. I'm not going to give any sort of like yield promises, but it is not 5%. It is not 10%. And if we can really cycle through originations and sell off these loans, we won't have another 2008, but we will have extremely high yields.
So you'd have investors coming in that they would bring their stable coins in, they would swap it for the Resi Finance stable coin, and then that would allow them to loan that in 3 different ways, but basically to homeowners on the back of the AI appraisal, which is linked to the data in the National Property Database, and they would be able to draw down some liquidity on their property using Resi, and the person that stumped up the stable coin in the first place would earn a yield on that.
Yeah, precisely. So if we need to do appraisals, we need 2 things. We need inspections and we need market data. So we'll have the market data problem solved by the end of the year. This will be possible. Anybody could go and use it on our dashboard pretty soon. And then the other side is inspections. So we will use in the initial phases real world inspections, where if somebody wants a loan, we call out to an inspector locally. They pay the fee to the inspector. They submit that report to our database, and our miners and validators will come up with this price that is justified in accordance to the pictures and the videos and the text report from an inspector. Now, the end game on that product is, hey, homeowner, you want a loan? Well, fill out your information, then just take a camera, and there's a ton of subnets that we can use to facilitate. Is this AI generated? What's going on, right? And that's beautiful, right? But that takes us really until the end of next year in building these 2 products out: the prediction market functionality, as well as the real estate stablecoin, real estate backed stablecoin.
Yeah. Right. I think I've got a fairly clear picture of it. Siam, what are you saying?
Yeah, I've got loads. Like, for context, folks, we had a Zoom with Sebie last week ago. It was about an hour long, and I spent the entire hour going, I don't understand this. I felt like a 4-year-old. I didn't understand a thing. And then Mark did his lovely, so basically it's this. I was like, yes, but I still don't understand it. Then what happened was this. If I could share my screen. This is unorthodox, but no. What about that?
Bit of Windows 98.
There we go. We can see it.
Is that better? Here we go. If I just make our faces over here. There we go. Yeah. And then like a few days later, Sebie posted this. And so if you go to his Twitter, which is at SebyVerse, and then his pinned one, read that, because in about probably in about 15 seconds after reading this, I was like, I get it now. So if at the end of this revenue search you still don't understand, I completely I know where you're coming from. This article will explain it. And the thing here that you said a lot of good things here. The old world hoards, the new world shares. Yeah, here we go. Layer 1, data foundation. It's a 3-layer revolution, as you say here. So what you're doing over the next sort of 6 months really is getting that layer 1, getting the data absolutely airtight, being that really good oracle. Is that correct?
Precisely. Yeah.
Yeah.
We can't go anywhere else until we do that.
Yeah. So you like the oracle, it will be useless if that data foundation isn't there, which is why. I saw someone saying, "Oh, they just forked Subnet 13," but that's actually a really good thing. I know the Macrocosmos boys pretty well, and like Data Universe is awesome in the way that they've orchestrated their data scraping. So the fact that Sebie has forked Subnet 13, it means that he's being efficient with his time, because you basically got a data scraping subnet ready to go. And then layer 3 is where you could do all sorts. I mean, I can think of layer 4, 5, and 6. There's so much that you can do after that. Now I'm in the point where I don't know how to stop sharing the screen. Here we go. And the other thing is that in that book and that book, I talked about tokenizing real estate. And one of the things that sort of stayed with me is that you really need to tokenize the deeds. So in order for the whole, the like 100+ trillion, or probably $200 trillion real estate market to be unlocked, because it's illiquid, for that to be liquid, you need to tokenize the deeds. And I think the knowledge gap I had was I went from sort of that to our Zoom call, and I didn't understand it, but I see what you're doing. So my first question is, before the quantum guys took over Subnet 44, there was a subnet called Next Place. And they too were a sort of a housing data scraper type thing. Do you know much about them, and do you know why they failed or how they failed?
Yeah, so it is my understanding. I've been actually trying to reach out to the founder and say, hey, I would love to chat with you and see like if you have any sort of alpha you can share with us, any learning lessons, because there's got to be something there. But in our research on their GitHub, right, it would be wrong for us not to look into what they were trying to do. I have basically my assumption of what their function was, but also why it failed. So what was their function? This subnet, I believe it was like 48 or 47, something like that. Their goal was to allow or to enable the prediction of price homes, right? That was kind of also their demise, right? I've been in real estate now, I don't know, since I was 16 years old, right? I've been helping my mom and my uncle and all these people who are in real estate, my family, in their ventures, right? In their investments. And never once was I like, oh, we need to predict the price, right? We don't want to predict the price. We want to like know the price. And that's that AI appraiser that I talked about. One, it's now going to why it didn't work is I wouldn't know, as someone who's been in this space a long time, I wouldn't know how to monetize that, right? Maybe you're gonna, if we enable, you would need like us and then them, right? You would need us to go make prediction markets and then them to go do some sort of like Mantis level price prediction and find some signal to then bet on these markets specifically. But then again, there's a ton of subnets that are doing the whole prediction market betting. So, and then the last thing, and I think this is where it might be my detriment, but also my biggest strong suit is I don't think they dreamed big enough. I don't think they went hard enough and they said, we're doing this massive thing. We're going to take it in chunks and we're going to be extremely focused within those chunks. But it seemed like they just wanted to do this one thing, and this one thing's hard to monetize. So that's my take.
Agreed. Yeah, so Todd Stees and Bad English Tea, if you're listening to this, please reply to Sebie's DMs.
They're there on Telegram and on Discord, so just look me up.
Fair enough. So, okay, let's talk about monetization. So it's quite a big project, and it seems like money or revenue is quite far away. When is the closest money, and what type of revenue is that?
Yeah, so we've actually started to make money already. Not heaps and heaps, but like I mentioned, using this this database, which is extremely limited, and also using other subnets, we've been able to scrape together a product, which is it's called predict.casa. So this is not something that we're laser focused on. It is essentially the product I built in my earlier 20s. And this product allows real estate investors and agents to say, okay, who is the best person to reach out to? Instead of reaching out to every single homeowner in a market and being a nuisance to the community, and also opening myself up to liability because if you call the wrong person, they litigate, you're screwed. Pardon my French. But the product there is giving a list of 1,000 home owners who are most likely to sell in the market. So we use gradients to fine tune a model for each customer. So when a customer comes to us, they say, hey, we want to work in this market. Here's all of our data for the last 10 years of us doing business, which feeds our database at Resi with trusted, vetted data with consumer information. And then we give them back this list of 1,000 homes that says, and here's the contact information to these homeowners. So that product already has 3 customers. We're turning on the advertising engine on Meta basically next week. And the last time I ran this, it was a 50K MRR type product for my mom's basement. So we have a lot of, we have high hopes. It was also not as eloquent as fine tuning. And yeah, so I'm very excited about that. But you're right. I think that we are quite a ways away from massive revenues, such as this stablecoin venture, then the prediction market is a bit closer. But it's also, to be a real estate oracle on a prediction market, you're not making heaps of money, right? It's not like cash isn't flying from the sky. It is a great, it's more of a distribution play, right? How can we build a ton of trust very fast on our data layer? And that will bring a ton of attention to other builders who want to use our APIs.
So I still have a bit of a knowledge gap with your Resi stablecoin. Like, how does that value flow back to Alpha?
Yeah, so value flows back to Alpha in 2 different ways. In every one of these protocols, first things first, the token allocation goes to the team token allocation of these protocols as we build them. That goes to the Resi holding company, right? So we'll be capitalized and won't have to sell, right? We'll decrease Alpha selling pressure first and foremost. We'll also bring a ton of attention, so that does help. And then the other element is API. This AI appraiser is not going to be cheap. It's going to be analyzing video. It's going to be analyzing images. We're going to have margin on this appraisal API. It's going to be using our data, right, which is going to have more cost to the API. And what we will likely do is set the precedent for how we want to give access to Resi, which is force builders, that's kind of harsh, but enforce staking, right? So if you want to access our database, sure, it's extremely cheap, but you're now going to have to stake and enter a vesting contract. So you can get this value back, but you have to pay for the data, you have to pay for the API, and you have to stake. So we don't just want to give this stuff away. We want value to flow back to our miners, to our holders, and also I think the customers will be happy, right? If the token goes up while they're in a vesting contract, we not only have controlled sell pressure, but they can be up, right? They can make money on actually using our product, which could be quite interesting.
How long would you force hold the miner's stake? Did you say you're going to get the miners to stump up? No, just the user, just the customer. Okay.
Yeah, we've thought about it, but I honestly am a idealist when it comes to just like like free market capitalism, and why would we? When you get paid from your job, it's not like I have to vest the cash that I make, right? This is like a role that these people play, so we want them to have it. I was more so talking about builders. So when builders come to Resi and say, hey, we want to use this cost savings, we say, yes, you're going to save money in terms of cost on your balance sheet, but you do have to stake our alpha. This might develop into different mechanisms and monetization strategies, but in terms of increasing buy pressure, decreasing sell pressure, and having API usage, and that API usage is not just going into our pockets. That API usage is all going to buybacks. We're not really dead set like many teams on burning. I think that we need that capital to grow and grow fast, especially if we want to do like nationwide advertising campaigns for homeowners, to know that we can offer them financing that doesn't hit their credit. And yeah, so the goal is to have a vesting contract there as well. Say when we get income and we buy back, how do we parse those distributions back to us out, so we have controlled sell pressure.
Nice. You're looking very blank there, Mark.
It is nice. How, if you take the revenue and you do the buybacks, how can you then use the revenue on a nationwide advertising campaign?
Because it's not just going to buybacks and it's locked, right? There's the mechanism of lock, there's the mechanism of burn, there's the mechanism of hold. And then what we really like is a mix of hold and lock, where it's going into a smart contract, and then we can distribute on a vesting schedule. Essentially, every month we get 1/24 of whatever balance is in there. So we would have to make a lot of revenue. We would have to go big. We'd have to be really efficient, especially in the early days, to make it make sense to do this advertising. But I think as we grow, I think as Bittensor evolves, the prospect of raising capital against the equity of Resi Labs, right, is going to massively increase our potential.
So when revenue flows in, you're going to use buybacks, which is going to support the token price then, and then that buyback is going to not be burnt, but will be subject to a lockup. And then at some point, you'll be able to realize the value of that alpha and then invest that in the business.
Yeah. I mean, if we just take all the revenue and then we buy the token and sell the token, it's kind of like, okay, why are you even doing this buyback? Like, it doesn't make sense. It's like some of those wallets that you see in sleuthing that are just like buying and selling the same token like within an instant. It's like,
that's what I can't get my head around here. What?
We're not doing that. Our goal is to buy back and controlled at the pace at which we're able to access this capital.
But you are going to buy back.
Yeah, all the revenue goes to buybacks into this contract, and this contract is then going to distribute this alpha in a spending manner back to us. Right, so it'll be unlocked on, say, on a 1/24 basis, where if we have.
I don't understand this at all. I feel like as an alpha holder, I want you to take that revenue and use it in your business now. That's how I want to see the value here. You're doing perhaps because I don't understand it, but you're choosing the worst of both options. You don't get the benefit of that revenue to spend on that nationwide marketing campaign, on client acquisition, on building out the team, on development. Instead, you're kind of locking that growth up for 24 months or for as long as it takes there.
And then you're selling it after 24 months.
Yeah, so we can then fund these advertising campaigns.
So you're just pressing pause
for 24 months, right? We're getting distributions every single month. It's not the full amount, like you said.
Yeah.
But this is also isn't at the moment applying to emissions. So we have our emissions, and that gives us operating capital. We also plan on doing a raise, but because, like you alluded to, Siam, this not a subnet where there's going to be money flying from the sky tomorrow or today.
Yeah.
So as we generate revenue, we need some sort of mechanism to say, all right, there's going to be controlled sell pressure. We are buying back or increased buy pressure. And we don't have to wait 24 months to get access to this capital, right? Every month we get access to new capital in addition to our emissions.
Okay, so would a better way to phrase it is we have OPEX, so operational expenditure, over the next, how you're running a business at the end of the day. So you have costs. So any revenue, you're just going to buy back, so to support your alpha. And with that alpha, you're effectively having it there as a rainy day pot. So if there's any form of growth that the business needs, whether it be marketing or more team members, etc., you've got this rainy day pot that you can sell, or
Exactly.
parts of it. Okay. Yeah. So it's controlled sell side. Okay.
No, this is very early days. I think we're 3 days away from our 1 month anniversary with Bittensor, right?
Yeah, I actually see the merit of that, because let's say some money comes in, you buy the alpha, and then you just burn it. You still have outgoings to pay, and there is sort of a negative connotation out there in detail world that subnet owners selling alpha. It's a freaking business. Of course they need to sell some alpha at some point to pay bills. So I think we need to sort of just destroy this negative connotation. Every business on the planet takes in revenue, if they make revenue, and then they have to pay bills. So
yeah, I think the best we can do is control the rate at which, and be transparent about the rate at which we are selling. So as long as we do that, right, emissions are a thing of their own. But with revenue, we don't get this revenue without the miners, right? We don't get this revenue without the validators being there. So it's like our ethos is, okay, how do we reward them? How do we make sure that they're taken care of in other ways that aren't burning, in other ways that aren't just giving them more incentive, right, in the form of just payouts? And this is what we've come to.
True. I don't know, there's a little part of me still thinking that I completely get that you need to cover bills and whatnot, but there must be a better solution. So, for example, we had Mog on. Did you see the revenue searcher Mog this morning?
I did not. I was in team meetings all day so
far.
At
some point today or tomorrow, make sure you watch that, because I think Mog now has absolutely nailed the perfect alphanomics, or a very good example. Not every subnet can do what he's about to do, but it's very good. So I think maybe a blended option is probably going to be quite good. And the other thing, which I think a lot of people probably won't realize, is that in 6 months' time, a year, or hell, 2 years' time, all of the early subnet pools are going to be so much deeper that if Sebie has to sell some bits and bobs to pay for new whatever, it's not going to touch the sides. So yeah, if he was to sell 10, 20 grand right now on his pool, which only has 5.07 thousand tau, then yeah, it would make a bit of a dent. But in 2 years' time, it's going to be much bigger.
Right. And we also have like I alluded to before, the prospect of raising capital. I know some people idealistically don't like that. But I do think we have a subnet. That subnet has emissions in the form of almost like investment, and then it has revenues. But if we have this holding company that we're designing to build protocols, right, using this infrastructure and support other builders to use this infrastructure, we won't really have to access that capital as aggressively as some may think, right? So if we have a great treasure chest per se of tau, USDC, and use that capital also to buy our alpha, our emissions go up, right, from buying alpha from our fundraise. That increases the additional investment, and also what we can do. Right now we're at a great spot, I'd say, based on where we started. But if we can increase our emissions substantially, it increases what we can do with our miners. Right? There's only so much you can do with so much capital coming from emissions.
Okay. So at the moment you have 0.4% emissions. If you were getting 2% emissions, what would you do with all of those emissions? How would you grow faster?
So we would immediately start the process of funding the team to build out the AI appraisal. Additionally, we would be able to fund the automated AI appraisal, right? So that's our KPI is essentially to get to that point, that 2% point, 1.5% point, in order to start this process. Because like I said, it is going to cost a lot to train a model on video analysis and image analysis and text analysis, which is needed to do AI appraisals.
Okay. So there's much more infra cost there with stuff like that. So would that be a subnet?
Yes.
Okay.
We might switch the database, or once we have a nationwide property database, maintenance mode, right? Keeping a live, updated version of that database is actually quite not cheap, but low cost, let's say. So that would probably be what we do is probably make that a subnet where 10%, 20% of emissions goes towards every day miners are checking if new listings are up, if new properties have sold. And then that 80% is going to go to the build out of specialized agents, first being an AI appraiser. Then we have, AI underwriter. Then we have property attorney, and all this narrow intelligence we need to build to go end to end. But yeah, that's our goal. You kind of hit it right on the head. If we can get to 2% emissions, we have that resource access to make these dreams, right? Make this roadmap extremely possible.
Okay, so magic wand, you're now at 2%. How much quicker does this compress your roadmap?
Wow, great question. I think that by the end of next year, we would be able to completely autonomously fund mortgages without any sort of inspector. We could have a homeowner go into a house with a camera, say, "This is my house." We direct them and say, okay, now go to your kitchen. Now show us under your cabinets in this way. And we have little diagrams and effects to show them how to record this. And we will be able to then underwrite loans. If we can underwrite loans with that type of scaling mechanism, I don't think people understand the global scale that can reach. Like, it's not just in New Jersey. It's not just in the USA. It's like any country in the world can now have financing powered by the people, right? The banks have been doing this forever, returning us 0.001%, and we're ecstatic about it, right? But the reason why we're all in crypto is to get access, to be our own bank, have access to this democratized finance, right? Decentralized finance. That is the breakthrough moment.
And the only way you can get those loans underwritten is because you have your data foundation layer. So it'll know in that area the rough price of that house is blah, and then the video stuff walking around the house will give a more sort of a higher fidelity picture of the state of the house inside and out, etc.
Exactly. And from that, we have to then build out a team, and ideally this can be. I think everything should converge into miners, right? You should have some miners that are essentially designing this stuff. You should have some miners that are doing the underwriting per se and focusing on that agent. Some miners upholding the database, right? And a very, very small team on the subnet owner side.
So at the moment, with your miners that are sort of scraping housing data, etc., how do you know someone's not there just doing bullshit? How do your validators know that the data coming in isn't just shit?
Great question. So over the weekend, the validators reached out to me and they're like, "Dude, what the F? We are spending so much money on this API. We are spending so much money on these APIs. Please make it stop." We were like, "Okay, we will rework the system," because like you said, we need to make sure it's not garbage, right? So to us, that's number one priority before scale, right? What we were changing the mechanism to function as is scraping. So if we get a property address, the goal for validators is to spot check, right? To reach the scale of say 200 plus miners who are in some cases running, or UIDs who are sometimes running many miners, we need to allow them to just check 1% of the properties or 0.5% of the properties on a given submission, right? So so if a miner submits properties, we want the validators to check 0.5% in a scattered manner, like in a pipeline manner, where one validator picks 1 through 100 and just does 0.5% of that, and it follows down the line of validators. So instead of using an API, we'll scrape those same sources. And there's essentially no cost. That's all CPU, right? So that's also a benefit, is that we're not using GPUs to run this mining right now, but we are using the distributed nature of it. And that's a high five to Bittensor.
And where are you storing all of this data?
Right now it's in S3 buckets.
Okay.
So centralized, but we have to open this up. Ideally, it goes on chain, right? If we can make this on chain, that would be amazing, right? So we just had a team meeting on Hippias, and we're kind of amazed at the fact that they built a chain as a subnet. And we're extremely impressed by that team. So we'd love to connect with them. If you guys are watching this, please reach out to us. Beautiful. Yeah. We're also talking to other teams like Ready AI.
Nice.
And that's because as we get all of this data from our users, that's in the form of call transcripts and notes from calls. What we just need is to label the sentiment and the subject matter of those types of data points. So the goal is build out these products, maximize, whether it's Gradients or Ready AI or Hippias, the scale that we can reach by having the cost savings and the scale of Bittensor subnet. So, there's a few moats built in there. The fact that we have our own subnet, the fact that we have access to all these other subnets, and if we're looking at other centralized counterparts, they can't keep up, right? It's just like compounding math that works in our favor. So it's quite exciting, in my opinion.
It's very exciting. Which is more difficult, building the nationwide property database or building the AI appraisal tool?
So I have to give a shout out to Ridges, because they've basically created this mechanism, this like blueprint for if you have a benchmarking system, how do you build an agent or agents that are immensely effective and at a huge fraction of the cost that it would traditionally cost. So yeah, we're going to essentially use the Ridges mechanism to build out this AI appraiser. So that is not going to be extremely novel and confusing. But to build this database and then to articulate this database is likely harder, right? And that's why we're also focusing on it first. Yes, there's more upside from the AI appraiser, but this database is challenging.
But there's only upside from the AI appraiser if you're operating in a jurisdiction that's got the database. So we talked briefly a moment ago about, once we've got that and we can do that, then we can do that anywhere. And you can't do it anywhere if there's no national database.
Right. It's like the chicken and the egg type of situation, right?
Yeah. And which isn't a problem, because the US market is so huge that there's plenty to go out there. And once you've made any sort of roads into that, you have all of the resources in the world to go anywhere else.
Yeah, and in some other countries, I believe it's Australia is a great example. This data is like open, right? There's like a extremely low cost APIs or open databases for this type of data. I'm not sure if that applies everywhere in the world. I'm sure it doesn't. But yeah, the goal is work in the nation that we know the best and we love the most, and make this dream possible in a big market, and then go global, right? So Siam, back to your point of, okay, you have 2% emissions. What are you going to do? It's like, okay, we're going to go global, right? If we get that type of income that we can use for operational capital, the doors open up for us so much more. So we're not going to beg for buys and for people to get us there, but I think that with the relationships we have, with the roadmap we have, it's almost inevitable.
What happens if you don't? What happens if your emissions stay at their current level and your plan of building this product and adding more customers using the meta ads in the coming weeks doesn't work and doesn't attract? What happens there?
Great question. What happens is we do what we can, and when Bittensor's at $3,000, then we start to do that stuff. Or when Tau is at $3,000, rather, we start to do those things. We essentially can only do what we can do, right? I talk to my team a lot, and they get in their head because they're like, this Bittensor thing is so complicated, and we can do so much. I'm like, guys, one thing at a time. They're also telling me this, right? I'm a crazy builder, right? I have these big ambitions, so that we can only do what we can only do, but we have to do it with the most rigor as possible. We have to go extremely hard in what we do.
So what is it that you are going to be turning the meta ads on for? And what you said that you were doing 50K a month on that service out of a basement not so long ago. What is that? And what are your chances of getting that straight up to 50K a month?
It's very high to get to that point. It's not quite challenging. We're doing that off of like a $5,000 advertising spend, so quite a great return because it is a high ticket product sold over the phone. But what the product is that basically real estate leads. So using gradients to fine tune models for real estate investors and real estate agents, and then submitting data for that fine tuning that they provide to us and we have in our database. So it's like our database plus their database and their preference plus gradients equals a list of 1,000 of the most likely to sell homeowners in any given market in the country. That data is extremely useful because one transaction for a real estate professional, say $25,000, they're willing to spend $2,500 just to make that happen, $5,000 just to make that happen in like the average market. So that was the product that we built and exited in the past, and that is what we're doing again.
So how much do you charge for that, and who? And is it monthly? I'm completely put off now because something's just appeared on the screen, and this is brand new information. We've never done that. But is that a monthly service, or do they just buy a bundle and then milk that for as long as they can?
Yeah, great question. So right now, because we're trying to keep revenue high and keep our operations simple, we're doing 3-month packages. So instead of just like going and saying, everybody come get this data, we're doing 3-month packages, paid up front. There's a setup fee. What this normally comes out to is a $2,000 to $1,000 setup fee. We are trying to give some discounts to people who've worked with us in the past, but $1,000 to $2,000 setup fee and this fine tuning setup. Then anywhere from $2,500 to $5,000 per month. So
depending on market.
Exactly, depending on the market, right? Like in say San Francisco or Los Angeles, that's going to be potentially $10,000 per month because you do one deal there, you're making $250,000, right? But we're selling basically quarterly packages. But as we progress, as we have more intake of leads that are interested in this product, we can then start to go monthly. We can then start to lower the cost and go do more scale. But essentially, if we fill up all the counties, the numbers are incredible, and then it also increases the cost of each market. Right, each county increases in value based on a bidding war for this data.
Yeah, that seems like a very, very straightforward bit of revenue generation. I really like that.
That's good, and that's much sooner than the big stuff.
Yeah, that's yesterday.
Yeah,
right.
That's like
because you've already got 3 clients on that. You've done it before. You turn the ads on. I like that. Right, what have you got on screen here, Simon? What's happening?
I found a little feature on the far right-hand side, which I've never seen before. It's called chat. So it takes in all the chat from X and YouTube. So T Leo Z from YouTube said, "Who lands up owning the properties if I guess the loans are defaulted?" Great question.
Who ends up owning? Who ends up? So yeah, it goes back to us, right? We own the property, and then we use ideally in the end, as Siam, you showed that you highlighted the execution layer of our three-layer revolution is going end to end on a transaction. So right now, I've made a ton of money working with Chase Bank on this type of stuff and finding the deals that have been defaulted, and then buying it from them, right? Because there's so much operational inefficiency, we get amazing prices on those types of deals. And what we'd be doing is saying, great, thanks for that property that you defaulted on and now we have ownership of. I'm sorry that happened. We're going to give you the best chance and make sure that doesn't happen. But if it does, then we can just sell it, right? So we can use our intelligence. That's another, we have AI appraiser, and then we have real estate agent, realtor agent, AI that will be built with that, say, 2 to 3% emissions. And yeah, so we end up owning it. We sell it. As we accumulate that US dollar value, it'll go back to our USDC or Resi USD holders in the form of yield, because ideally we make some money on appreciation and interest.
Okay. Yeah, but not alpha, yeah, because this would be part of your stablecoin thing.
Right. And then revenue that we take as a cut from that goes into the mechanism we talked about before.
Alpha, yeah. Nice. Go for it, Mark.
Look at you now. You're really pleased because you found a new function.
Got a
Unbelievable.
new toy to play with.
That's really put me off. I've taken this 50,000 MRR piece because that's the number that you said, but actually the ceiling for that is a lot higher than 50.
Yeah.
In the short term, there's no reason why you couldn't create easily $100,000 a month of revenue on that product just using Meta ads. That would be very, very straightforward. So my thinking there is, and maybe this is one for you, Siam. Would these guys be better off spending that revenue or investing it to increase their emissions?
I'd have to get back to you. I think probably investing it, but so you caught me mid calculation there. I was working out your miner emissions per day and per month, and I was just thinking, how many of these clients do you need just to offset miner emissions? And I was just trying to factor in what the miner emissions per day would be at 2% emissions. So I'm thinking it's roughly about 25.
Because if you can do that, if you can neutralize that the kind of the sell side, then you can. It's much easier to support the price at that point and keep hold of those emissions.
Right.
So that's the question: is how much revenue do you need to keep pushing in to neutralize the sell side and keep the emissions at a higher level?
Yeah. So I'm rough spitballing here: 25 tau per day. For the minor emission sell side times 30.42, which is the average amount, 760.5 tau per month. Now, obviously, price of tau, let's just say through 20. So roughly, again, I'm going to be off by a varying degree here. At roughly 2% emissions, you'll have about $250,000 per month in minor sell side. So if you can get those quick, easy, low-hanging fruit sales just to match that then gives you like an unlimited runway to then do the big shit. And the big, like with this is one of those subnets that could be a multi-billion-dollar revenue business if you execute properly.
Right.
But I've come across many, and this is where I've been stung in the past, where I've met many great businesses, good founders, and the world looked like it was their oyster, but then execution failed for various reasons. So, you have huge potential here, but it's just all down to that execution.
I agree. I think that, like you said, if we can get to that, say, 250K, 300K mark, which for these types of high ticket products in real estate is very doable, right? That would be wonderful. That will also increase, I don't know, some sort of hype as we raise around for these larger vision things and Resi Labs. We'll be able to use some of that money to buy back alpha. That'll sustain us as well at a higher price. And it puts us in a really great spot. We're buying everybody's bags up and retaining our emissions. at the same time.
Sorry, my math was wrong by quite a big factor. It's actually when you get to around 2%, you'll have roughly 1,900 TAU per month of sell side from miners. So you'd have to offset, call it 1,900 TAU per month. So times 320, yeah, it's more like 600 grand, depending on the price of TAU, obviously.
And that's a per month. You said MRR, correct?
Yeah, per month. Yeah.
Right.
So,
yeah, so break that down per state, right? If we have, say, 40 active states, you divide that 600,000 by 40 states, that's not that much money.
Not much, yeah. So then it's just getting out there.
So in terms of getting out there, something that you said scared me, which is that you're going to generate that. Oh, no, actually, I'm doing you a disservice because I think you were talking about when you've done this before. You generated the 50K MRR from a 5K meta spend.
Yeah.
But how much are you going to spend this time? How much have you got earmarked on marketing this time? And where's that cash coming from? And how much more could we spend?
Beautiful question. Okay. So I have a marketing thesis that I've always followed. It is one, and it's based on Alex Hormozi. I'm not sure if you're familiar with him.
I am.
But yeah, I love his work. If my customer can pay for my next 2, 3, 4 customers, I'm a winning man, right? I'm playing a winning game.
Yeah.
That is how we grow. So this first month that we're doing advertising, we're spending 5K. Right. Now that takes time to warm up the Facebook algorithm, the advertising engine algorithm, as well as Instagram. So there is some like 2 weeks, 3 weeks setup time to make that run like a well-oiled machine. But the second we take in revenue, we have emissions. I have savings that I'm still destroying in this venture so that we can avoid selling alpha. I think that we have a lot of really good news coming. So if we can hold on to this precious alpha for as long as possible, it'll decrease our cost basis. So then that advertising ability is extremely strengthened.
Yeah. And also, I think what a lot of subnet owners and others are completely ignoring is the compounded yield of that alpha over, let's say, 2 years or 1 year, and it compounds on a daily basis. So it's nuts. So you could be using that extra yield that you've just built up over the space of a year. So it's free money. Random question: you follow Hormozi a lot. Why on earth does he always have that plaster on his face? What's that about?
It's a really good question. I saw it a bunch and I was like, let me just try this. And it really didn't do much for me, but I'm sure it does something for somebody, and he might be one of those somebodies.
It's the signature. It's the costume. That's how you know him. The hair, the nose, the shirt.
Yeah, that's how everybody knows him. I also think that some people with deviated septums, they do benefit from it. Maybe he got into a fight when he was younger and his nose is broken. So who knows? But yes, definitely a good branding move, because who else is doing that?
What are you going to do, Mark, for your branding?
I'm just going to put one of those, and I suggest we both put one of those on the next. That should be our thing. We should just
go with a bandana, maybe. A bandana would look great.
Yeah. Listen, I mean, I'm pleased that you like Hormozi, because that is absolutely the right answer when it comes to marketing. Absolutely spot on. Music to my ears. So you are destroying savings. What? Any plans to take any sort of investment in here? If somebody wants to do a deal, would you be interested in an equity deal, in an alpha deal? What sort of investment or investor would you be looking for to come in and make those savings last a little bit longer, or allow you just to rapidly increase everything?
Mark's asking for a friend.
Yeah.
So we're not going to turn down any sort of OTC deals that we can do. Chances are we take capital and then just buy the alpha back if we do OTC, because we're so bullish on what we have going on here and we want to increase buy pressure. But the real that's for your friend who's asking on that subject. But in regards to the equity raise, that's also a priority of ours before the end of the year, likely before Thanksgiving time. So if we can raise around, I don't want to go into any sort of details quite yet. I'll probably share in private chats with you guys. I don't know about the legality of like advertising or raise information. I was told not to do it. But regardless, if we can raise capital, essentially in par with the FDV of our subnet, it puts us in an extremely great position financially. And I won't be destroying my savings, so that would be awesome.
So you're considering equity investment and also OTC into alpha?
Yeah, I mean, it allows us to take in cash on the OTC side and then just buy back alpha. So obviously we lose a few points, but we can essentially enable great news for ourselves, increase alpha value. We can buy it all back, right? So the equitable value is retained. And then we have continued emissions. So at a higher rate based on all of that, uplift. And then if we do a big raise, there's a ton of uplift on the alpha price because we'd be buying alpha with that fundraise. We'd be holding TAO and holding USDC with the rest of it. So yeah, we're extremely bullish on us, but also TAO, and really just want to hold enough cash for the quarter. That's our outlook.
What are the chances that Atom Data come knocking?
So funny enough, one of our advisors was their chief data officer for the past 18 years. Yeah, he's basically the guy that built.
Maybe put that earlier in the investor deck.
What the How have you only just mentioned this? 1 hour and 9 minutes in. It's
like, you can't give everybody everything at once. But yeah,
I'll speak to Elon. He's going to buy my shit. It's like
So with him, he did that. That was his past. He's extremely well connected, but now he works for a company that essentially is the back end data and software for all of the biggest brokerages in the country. So we have a great distribution path of our data products, of our lending products through an advisor of ours.
Okay, so who is on your C-suite then? Whether they're remote advisors or whatnot. So there's you're the head honcho.
What else aren't you telling us?
Right. Yeah. So we have a chief of sales, right? Almost like a CSO, CRO type of player. We have and this is somebody who's done 9-figure exits in the past and basically built those sales teams. So that's why I have the confidence of getting to that $600K per month quite fast. Then we have a CTO. This is a guy that I've been working with since 2021. So it's a really great friend of mine, and yeah, that's him. And then we have a lead AI researcher who just is super heady, a little bit too crazy for me. But him and the CTO are also great friends, and that's essentially the leadership here, right? Then we have some advisors, we have some friends who own subnets and just want to see us win.
And how close are you with this data? So what was his position for 18 years?
Chief Data Officer of Atom Data. He basically built their database, and they're essentially their business model around the database.
Okay, and what relationship do you have with him? Are you paying him? Is it this is really important, by the way?
Equity. So he's going to be on our cap table in the next couple weeks once he signs the paperwork. But yeah, we've been meeting with him for the past month, and he loves what we're doing. He thinks we're just crazy and wants to see us win because everybody in the real estate industry is very vanilla, and we're bringing this completely new approach, which he seems to like a lot.
He's literally the big swinging dick in the very market that you're about to swim in.
Bingo. Yes.
You should lead with that, mate. Seriously.
I will. I don't like to count my chickens before they hatch. The guy's got to.
You want that paperwork signed?
Yeah, get that paperwork.
He's probably going to want more after hearing you guys talk about him.
Yeah, he's not that important. You can do.
He's not going to pick up my phone call. He's going to be like, "I'm the big swinging dick. Why are you calling me?"
So, he's not going to be watching this 1 hour and 12 minutes in.
He won't get this far.
What we mentioned, he'll be like,
yeah. So yeah, right. Don't tell him. I won't tell him. We'll be okay.
So, but that didn't answer the question. What are the chances that they are going to come knocking, and what's going to happen if and when they do? especially now they've got a Trojan horse.
That's true. They'll probably try to make us an offer to like F off and then deter us from the data side and just say, hey, we'll use Atom data for this AI appraiser and we'll build it around that.
Then what?
I'm not the type to sell out. I think that this is like my opportunity in this lifetime. I have like almost like a spiritual attachment to this venture, which might be bad and good. But I think that, like you said, Siam, I'm here to make this a public company, right? I want Resi Labs to go public in the early 2030s, 2030 type time frame. And it can be a multi-billion dollar per year in revenue organization, right? This is not just one subnet. It's not just one protocol. It is a constellation of protocols on a subnet in the early days, right? So we have this extreme upside that I shouldn't entertain.
So Atom comes and makes you an 8-figure buyout. You go home and chat with your real estate mum and dad. What do they say?
They say take it, but they've never done something at this scale, right? If I talk to my uncle, who's like a massive real estate developer, he'd say, "Don't take it. Don't be stupid. He's always told me you're young, right? Play the game as a young person, right? Live cheap. I live at my dad's house, right? So I can have all the money possible to spend on the venture."
Yeah.
And
how old are you?
I'm 25. Right. So I'm like foregoing all of this exciting life stuff so that I can pursue this and like really be in the trenches with my team. And yeah, I think that it would be like idiotic to take an 8-figure deal. Like, it would have to be like a $1 billion deal for us to even like scoff at it, or even think to scoff, right? Or answer the email. Right. And that's going to be in some time. So I don't want to be too ambitious and too egregious, but I have to. Yeah.
I love it. I love the ambition. I love the bullishness. It's wonderful. Nice. Absolutely wonderful. Take your uncle's advice. You're onto something big here. Yeah. But I think that's us out of time, out of questions.
Yeah. 1,142 live viewers.
It's crazy. The numbers. He loves them. But it's been a really good one. Sebie, thank you. I really enjoyed that. And I think you're onto something here. We'll do everything that we can to support you, as we always will. Hopefully get you back on again in a few weeks' time when you got some revenues.
More revenues. He's already got revenue.
Yes. Yeah. Yes. Well, I have to say, I love this show a lot. Like, it's like the thing, like if I'm driving, it's revenue search. If I'm cleaning, it's revenue search. So I want to give my appreciation to you guys on that. I want to say thank you to everybody watching. And this has been a lot of fun. I hope that we can do this in the future again and have more exciting.
100%. Definitely.
We absolutely can. Thank
you. Everyone's watching. Thank you.
Thank you, everybody. Goodbye.